In this short video recording, we are going to look at markups versus gross margins and how to do the calculations. Remember again to go through all your learning unit outcomes at the end of every learning unit and to make sure that you will be able to answer a question based on each of these outcomes. In Learning Unit 3, there are three key things that you can be tested on: your knowledge of the VAT theory, your VAT calculations, and then your markup calculations. This video will look specifically at markup calculations. So in your textbook, if you look at page 94 and 95, you can open that now and then you can check while I talk about it. They talk about the difference between a gross margin and a markup. The term a gross margin refers to your profit expressed as a percentage over your selling price. So if we talk about gross margin in your own mind, you must hear profit over selling price. Sometimes in questions you'll see we actually call it the markup on selling price. This markup is used to determine the ability of your gross profits to cover your overheads. And you can find all of this discussed on pages 94 and 95 in your textbook. Then you will see we also refer to markups, and when a question talks about a markup, we talk about the profit over the cost price, or sometimes we refer to it as the markup on cost. So you can see that's different from the gross margin, where for a gross margin we talk about profit over selling price. So make sure that you understand these two terms and how each one of these are calculated, because your gross margin and your gross margin and your gross profit is not the same thing. And I'll prove it to you just now with amounts. It doesn't give us the same answer. So you must have a clear understanding of what we understand from an accounting perspective, what is a gross margin versus what is a markup. So let's just recap then. If we talk about markups, and particularly markups on cost, we are using this formula where we say it is profit over cost price. If we talk about gross margin, or sometimes we will just say a markup on selling price, then we're talking about this formula, profit over selling price. So make sure that you're going to read pages 94 and 95 in your textbook so that you have a clear understanding about what is gross margin and what is a markup. So let's look at it with some amounts. So originally the business bought the product for 110 rands, and then they sold it for 176 rands. Because remember, the objective of the business is to make a profit. So they are never going to sell the item for the same amount that they originally paid for it. They're going to add something to the original cost, and that is what we will call the profit. So when they sell this item, they are going to make a 66 rands profit on the particular item. Now, if we use these amounts to calculate the gross margin and the markup, first we're going to calculate the markup. And remember, for a markup, we said it was the cost, it is the cost of the item that we have to work with. So we're going to take the 66 rands profit. There you can see it, the 66 rands profit, and we're going to divide it by the 110 rands cost. And so the markup that was achieved on this particular product is 60%. So with other words, if they take the cost price and they add to it 60%, it will give them the selling price. On the other hand, the gross margin, remember the gross margin is the profit divided by the selling price. Okay, so now we're going to divide it by the selling price, and that gives us a gross margin of 37.5%. So you can see clearly, based on the same scenario, the same set of information, the markup is 60%, yet the gross margin is 37.5%. So that's why you have to be very certain whether this particular question or business were using markup on cost price specifically, or were they making use of a gross margin? Because as you can see, it gives us two very different answers. In an assessment question, and you'll also see it in your textbook questions, we have to tell you whether we're giving you the markup or are we giving you the gross margin, and we have to give you the markup or gross margin percentage so that you can then use it to work out the price, either including or excluding any profits. So now let's show you how this is going to work with a couple of calculations. So here we have a scenario where the selling price, so take note of that, the selling price is 25,000 rands. This business uses a 25% markup, and I'm now specifically talking about a markup on the cost price. And the question now says, work out the cost price. So to do that, we are going to use the formula that's up on your screen now. So we're going to use the selling price, the 25,000 Rand that was given to us, and we're going to multiply it with 100 divided by 100 plus the 25%, which was that percentage also given to us in the question. And that means that this product, the original cost price was 20,000 Rands. So this particular calculation is if the markup was on the cost price. We can once again use our formula of what we want over what we have. What did we want? We wanted to calculate the cost price. What was given to us in the question? In the question, we were given the selling price. So this formula works well for your VAT calculations, but it works just as well if you are doing any markup or gross margin calculations. So our 25,000 Rands, that was our selling price. We multiplied with what we want, the price excluding the markup, and we divided with what we have. And what did we have? We had the selling price. And once again, it gives us the price excluding any markups of 20,000 Rands. Now you get the opportunity to practice one, so pause the video here. Get close, get your calculator next to you, and then let's see if you are able to work out the cost price based on this set of information. So the selling price is 5,250 Rands. In this scenario, we have a 40% markup, again, a markup on cost, and we want you to work out the cost price. Once you've done the calculation, start the video again and then check it against my answer. Right, so if you've started your video again, it means you've done your calculation, and check your calculator quickly. Did you get 3,750 Rands? So we took the price including the profit, so that was the selling price. I divided it by 1.4, and that gave me the price excluding any profits of 3,750 Rands. And again, remember, in accounting, it's so important that you must always show all your workings. So please get in the habit right from today by always showing your calculations, even if it's just a homework exercise. Start practicing right from now to always show your workings so that you can get optimal marks in your assignment, your test, and in your exam. Okay, now we're going to look at the next set of calculations, and this time around we're going to work with gross margins. Okay, so now we're not working with markups, we're going to work with gross margins. Again, I'm giving you a selling price of 25,000 rands, but this time around we're using a gross margin of 25%. Or remember, the other way we can say it, it's a markup on the selling price of 25%. Now we're going to use a different formula. The formula now looks like this. We're still going to use the selling price, so the 25,000, there you can see it. But this time we take 100 minus gross margin. And we divide that by 100. And now the cost price comes out as 18,750 rands. If you prefer, you can once again use this formula. We can once again go to what we want. What did we want? We wanted the cost price. What was given to us in the question? The selling price was given to us. So that's what we have. So this formula again works just as well for these kind of calculations. So there it is up in the right hand corner of your screen now, 25,000 rands, which was the selling price, times what we want, 75, divide by what we have, 100, and we get the same answer as before, 18,750 rands. So remember earlier in the video, I said you have to be very clear if the markup is a markup on cost price or a gross margin, or with other words, a markup on selling price, because it gives you two very different answers. And we've just illustrated it with our example. So if the 25% was a markup, the cost price is 20,000 rands. If the 25% is a gross margin, the cost price is only 18,750 rands. So therefore, you have to be very sure in your assessment which one are they using. Are they talking about a markup, specifically a markup on the cost price, or are they talking about a gross margin or a markup on the selling price? Because you can see it gives you very different answers, and it will then obviously impact your final answer. Okay, here's now one for you to practice again. So pause the video once again, get out your calculator and see if you can now work out the cost price. So we're sitting here with a selling price, 5,250 rands, and a 40% gross margin. So see if you're able to work out the cost price, and then once you've done it, you can start up the video again and check it against my answer. Right, so if you're on this slide, it means you've completed your calculation, and I hope on your calculator you've managed to get to the 3,150 rands. So that will then be the cost price if we apply a 40% markup and the product is sold at 5,250 rands. And then just the important reminder again is to show all your workings. So please make sure in any assessment that you do, you are showing all your workings. So as we said at the start, in Learning Unit 3, there are 3 key things that you need to know by the end of this learning unit. Make sure you know all your VAT theory. If you need more revision on that, look at question 3.3 and 3.12 in your textbook. And remember again, the answers are in Annexure A at the back of your textbook. If you still need help with your VAT calculations, there is another short video similar to this one that will just revise again the key aspects of your VAT calculations. And then for your markup calculations, go and try question 3.7 and see if you can complete question 3.7. Another excellent question that you can try is question 3.8. Question 3.8 actually combines both your VAT knowledge and your markup knowledge into one combined question. And if you look at past papers, there are actually quite a few past papers where there was a question asked similar to question 3.8. So once you understand both VAT and markups, then go and try question 3.8 if you didn't do it in class, and make sure that you can then do a question where we combine both of this into one question. Remember again that both VAT and markups are very important because it will impact your understanding of the cash and credit journals that we will be covering with you in Learning Units 4, 5, and 6. So please make sure you've got a good understanding of markups and VAT so that you can move on to Learning Units 4, 5, and 6 where we cover the journals. Remember again, your key to passing Accounting 1A this semester is to attend as many of your classes as you can, to consistently work at home by watching videos like this and redoing all the textbook examples and questions. Make sure that you reach out to your lecturer if you're not understanding anything, and do not fall behind, because you can see now, if you are falling behind in Learning Unit 3, you are going to struggle in Learning Units 4, 5, and 6 when we cover the journals with you. Please make sure you are reaching out to your lecturer either by talking to them during your class time or sending them a quick email if you need any assistance from your lecturer. And then the last reminder is please make sure you are using your Accounting 1A textbook. Please make sure that you're doing all the theory, all the examples, and all the questions in your textbook. A video like this is purely a little teaching aid just to assist you with things that you might still be struggling with. But it is in no way intended to replace your textbook. So please make sure that you are optimizing your textbook and the other resources available to you.